Good morning, everyone, and thank you for joining us on Morning Markets. Today, we'll look at US economic growth from yesterday and also on some of the employment data. So looking at first quarter US GDP at a headline level, coming in at 1.1% on an annualized basis. Below expectations, the market had been looking for 1.9%. But when we dig into it, there are some trends that I think are worth bringing out as it speaks to the comments that we have been making around economic activity over recent weeks and months. Firstly, we continue to see strength of the consumer. The consumer and consumption continues to drive US economic growth, along with government expenditure in the first quarter. I think when we look into the other aspects of it, there are some other concerning aspects in terms of business investment declining at an annualized rate of 7.3%. And that's important when we look to the future and think about growth as we look into the months ahead. The other aspect that was, I suppose, could be taken as disappointing but negative from a GDP perspective was the reduction in investment in stock or inventory as it's called. But that, I think, is probably more of a positive over the longer term because it does mean that there's less inventory in the system to be reduced as economic activity slows. So something for both, I think, within the GDP report. The employment report, however, continued to really illustrate the strength of the employment situation in the US, with new claims coming in well below expectations for the week. So mixed trends, something for everyone. I think, albeit that we've seen how the stock market then has been reacting to this data, positive results coming through from technology companies, and that really feeding into that positive, as you can see in the ticker, the delivered performance from US markets yesterday. Indeed, Facebook, or Meta as it's now known, up close to 15% on good results, but also guiding for a better outlook. Just looking at today, economic data, there's a lot of it from Japan with the BOJ and the new governor's first meeting. Also in Europe, again, a mixed picture. Inflation slightly ahead of expectation in France, but below expectation in Spain. All of this just points to that changing and challenging backdrop that we've got as we navigate our way through from what have been exceptionally high inflation levels. We'll continue to get company results over the today, and indeed as we look into next week as well. I think one of the things just to mention from results really at the minute, particularly as it relates to the UK, is just the strength of corporate activity as it relates to UK companies. We saw a number of UK businesses being acquired by private equity companies in recent weeks, and then we've also seen today the acquisition of Numis, which is a financial advisory and stockbroking firm in the UK, being acquired by Deutsche Bank. Why do I mention that? Well, it was only 4 weeks ago that we were discussing how challenged Deutsche Bank was being perceived by the market. Yet today it's paid a 72% premium for Numis. I'll leave it there in terms of comments on the day, but please do join us later for our podcast where we'll be looking back on some of the key developments over the past 4 months in asset markets. Many thanks.